Hey there, Dale.
Hey, how you doing?
I'm doing pretty darn good. Hopefully you had a nice 3-day weekend.
Yeah, it was kind of nice. And of course, the weekend mean it's no longer Happy Tuesday, it's Happy Wednesday.
Exactly. Yeah. Wish I could say I had a nice relaxing weekend, but truth is we're always working on these weekends. So anything you guys need, give us a call. But we're going to jump into it. Mortgage Backed Securities. We're kind of having some volatility. We did have a slight downturn towards the beginning half of February. We've come back up since, and there's just volatility. If you'll notice, these Japanese candlesticks, they're starting to get a little bit bigger. Every single move on every single day seems a little bit more than it used to be, especially if you compare it to previous runs. You'll start to see we have some big moments, and that's when big news came in. But it seems as though over the past few weeks, we're just having big moves every day.
Yeah, it's you know, it's kind of funny. We look at this week compared to last week, and where the chart ends is almost identical. So, but they're, movement up and down quite a bit for a week time frame.
Yeah, which is a little bit unique, and this basically just signals volatility in the market, unpredictability, and people waiting. Right now, like anything else with the stock market, it's almost a form of gambling. Investors are gambling on whether or not we're going to get good inflation figures, whether or not we're going to have a good outlook on the future economy, whether or not we're going to see a recession. These are the kinds of things that are being gambled on right now. And in the next coming weeks, we're going to see the Fed meeting minutes from January. That'll be more insightful on where the economy is headed, or at least where the Federal Reserve thinks it's headed. So this is just signaling that there's going to be a big change in a particular direction in the near-ish future. Where it goes, we don't know. That's why we are just loan officers in Amador County. Dale, how about rates? We are down a bit.
Yeah, so if I remember correctly, last week we were about 6.9. So we are just down just a small taste, 6.87. But in the grand scheme of things, it's not as low as it's as low as it's been this year.
Yeah.
Last year, of course, it was a little bit lower, but it had gone back up, gone back down. But, the trend right now is a little bit on the downward side, and that is a good thing.
Yeah, it's definitely hope. And oddly enough, compared to about a year ago, we're only 1/8% higher than we were this time last year. So there is some meaningful progress, but do keep in mind, a lot of people think, oh, it's 6.87% if I get a mortgage. Well, keep in mind, this is with 20% down any credit score on a 30-year fixed rate mortgage. So, and points. If you don't know about discount points, we did a video maybe 2 or 3 weeks ago talking all about this and how this 6.87 might not be the same for every single person. Dale, because rates are so high right now, and just read an article yesterday about that America now has the highest amount of credit card debt that it ever has seen, about $1.12 trillion of debt. So cash out refinances are a big talk, but that's not the only type of refinance. Can you walk us through the 3 main types?
Yeah, so basically, well, the real types is a cash out and a rate and term, okay?
Yeah.
A cash out simply is redoing the entire loan to pull money out, but the challenge is many of us have very low interest rates because of how low they were 3 and 4 years ago. So that mode may not be exactly right for everybody, but we're going to jump over to the HELOC loan. That's just really taking out equity as a second mortgage, not touching your first. So that could be a good option. And then, of course, a rate and term refi is nothing more than you have a 8% rate now and you want to refinance and get a 7% rate, or however the numbers work out. Yeah. That's the main 3 refi options, if you will.
Yeah, now there are plenty of other refinance products, but for the main purposes of what people look for in a refinance, these are the 3 main options. And I want to put a little bit more emphasis on HELOCs and HELoans because of the fact that you might have that COVID interest rate. It's just extremely low, and you feel as though your equity is trapped in your house and you can't access any of it. Well, that's where the second comes in. You leave the loan that you currently have, you leave it off to the side. It does not get touched. Nothing happens to it. But what you're doing is you're drawing another line of equity out of your home for a HELOC or a HELoan. Now, it's an adjustable rate for a HELOC, traditionally speaking, and a fixed rate for a HELoan. The details are more significant, and there are different options between 10, 20, 30, 15 years. There's so many different ways to skin this cat. But the big thing I want to point out is just the difference between the interest rate on either a cash out refinance or a HELOC or HELoan. And it's better than 25 or 30% on a credit card. So
Yep.
if you find yourself in a position, or you find clients that might be in a position where they're starting to feel the crunch of that credit card debt and it's getting out of control, whether it's a cash out refinance or a HELOC or HELoan, it is a wonderful opportunity to take that interest rate from 25 down to maybe 7.5, could be less. So
And also, if you look at it, and obviously you have to do the math or let us do the math for you.
please,
But
yeah.
if you've got 2.5 on your first mortgage, maybe taking 8 on a second isn't so bad, because combined, maybe you're at 4.5, 5%. So you have to look at everything, all the picture, and obviously we'll be happy to do the math for you.
Yeah, and the best part is we'll run the numbers. We'll give you the right accurate figures so that you can make the decision for yourself and determine, is it better to have these credit cards with the 2% loan? Is it better to do a cash out altogether? Is it better to do a half and half, leave the loan alone, draw a sec? This is stuff that we can help you see the figures, but you can ultimately make the right decision for your situation.
Absolutely.
All right. Well, Dale, that wraps it up for today. Appreciate your time.
Absolutely. You have a great day.
You too. Bye.
Bye now.